Hello, everybody, and thank you for tuning in to the Liberty Report. With me today is Chris Rosini, our co-host. Chris, nice to have you with us. Very good, and we want to talk about the Fed today. We want to talk about money, and if we're going to talk about the money, we have to talk about gold, because I was brought up in the ancient times when gold was money. But most people in Washington, especially, you can't get a seat on the Federal Reserve Board if you think gold is money. You know, you have to say paper is money, fiat is money. And you have to be a strong believer in counterfeiting and theft and taxing through devaluation of your currency. And you know, that narrows the field, and so you have to get approval from the deep state in order to get. But you know, every once in a while, there's some frustration on the board, and the big issue that I've talked about a lot, and not many people paid much attention to it, was what Reagan did in 1987 after the stock market crash. He created this President's Working Group on Financial Markets, more commonly known as the Plunge Protection Team. That they have to be more energetic in preventing stock markets from crashing, because it was in 87 when it crashed like over 20% in one day. So they have to have that containment of these panics. But you know, in recent years, months, several months ago, there were two individuals from the FOMC that got off the board. And this might tell you something about why we think there's an end coming to the Fed. And they were getting off, and they were economic planners. They were in disagreement. Hopefully they were working more in our direction, but I don't know the details. But they said they couldn't, that John Williams was not knowledgeable, that he was lost to this. He didn't even know what was going on. So they were criticizing Williams, who was president of the New York Fed, which is a pretty important position. But there is a skirmish going on because they're working and they're trying to salvage an unworkable system. They're worrying about the next downturn in financial crisis. And my concerns is more, are we ever going to end the financial crisis that started in 2008? Because it's just a continuation of it. We've been feeding the fire of inflation and distortion and debt and all the problems that we have ever since then. And this week we had another interesting episode with the Fed, because the Fed met and they had their meeting, and Powell came out and had his press conference. And there was a major announcement, even though it was typical of the interventions, but it was different. It stirred up the markets, and that he says, well, you know, things are going pretty good now. We think we can back off. We don't have to lower the rates anymore, and it's doing so well, we don't have to raise the rates. We'll just keep the rates all the same next year. We're going to keep interest rates nice and low, 1.5%, and everybody's going to be happy. But that sent a lot of activity through the markets. So, you know, the dollar market, because that meant interest rates might be lower than they should be. So the dollar went down and gold went up, and the stocks went both ways, up and down. But it was a big event, and this was a follow-up. Chris, and this is something I've talked about, and you have too, about what happened 2.5 months ago. And that is, the Fed woke up one morning and they said, holy man, what are the Fed rates doing? They bucked up that 10%, caught the Fed off guard, and boy, they had to rush around. And you know, it's amazing. It's really impressive. They can create trillions of dollars, at least hundreds of billions of dollars with a click of a switch. So they did it, and they came to the rescue and lowered these rates. But now, you know, there's a lot of plans for a lot more of that. If you look at it, Chris, I think you can tell that there's going to be a lot more, support for the repo market, which is what's concerning the financial markets right now.
Right, Dr. Paul, and you're right. This is a continuation of the '08 crisis. Back then, there was a temporary measure. At the depths of the crisis, they were going to print these trillions of dollars and buy all this junk, these mortgage-backed securities and treasuries. And it was always going to be just temporary, but more permanent than a temporary policy when it comes to government. And they let about $700 billion roll off of that, and they went nowhere near back to normal. And now, in just a few months, they've added about half of that back in just like 3 months. They're now printing more than they printed in QE1. which means they are printing faster and more than in the greatest crisis that the Fed has ever faced. It's incredible. Yet everybody is distracted by impeachment and all sorts of nonsense, and very, very few are aware of just how serious this is.
The Fed's been persistent in trying to get people not to use the term QE, the quantitative easing, because that brings back memories of a crisis, a few years ago. But and I don't think we should force that on them. I don't think we should call it QE and exactly what was happening back then. And you've already made the point, Chris, of how huge this is. Because I don't think it's the same. I think it's a lot worse. I think it's winding down the whole system, and the failures are becoming more evident, and it's more nervous, the market. But they're talking about, the $500 billion they're injecting right now, and this is going to continue. And the amount that is there is going to be increased. One thing that always sort of catches my attention, although I think anybody up in Washington doesn't really care, because of the bailouts before in 2008 and 2009, the direct bailouts of trying to salvage companies and banks was trillions of dollars. And some people believe there was an injection in and out of $17 trillion. And I get to thinking, I think the founders had something to say about any appropriation and spending, authorization, appropriation, had to go through the Congress. And just like right now, they're injecting billions of dollars, but the thought that some of this should be, at least approved by the Congress, well, it would be impossible because the money's not there. If you're going to have a counterfeiter, you can't expose them for counterfeiting. And I think that is the biggest thing going on now. Is it's a fallacy. It's not working. The failure is coming through, because counterfeiting is not a nice thing to do. It's immoral. And it usually fails. It makes people very angry, subsidizes the wrong people, and it comes crashing down. I mean, when you're a counterfeiter at the Fed, you don't expect the CIA or the Federal Reserve, because they're probably buddies, they're not going to come in and arrest you for counterfeiting. But it is an actual counterfeiting of the units of account, and that's why we have these problems. And then they go into, how do they cover the bases? They have to build up a lot of lies. There's no inflation, but I was just wondering whether they count stock prices soaring and bond prices soaring, whether that is inflation. And there's a lot of other segments of the economy where prices are going up. There's a lot of inflation in prices, but people should think more about inflation is the increase in the supply of money, especially artificially by government. So there's a ton of inflation, and right now they're scurrying around to try to hide it and compensate for it and get by with it. But I think every day you'll see something, if you look carefully, that they're losing it. And I think when you see people resigning from the plunge protection team, that's their goal. And I guess they're saying, this is unmanageable. I can't do this. I'm getting out of this place. And they have, because it is unmanageable. And to think now that the solution is not raising interest rates or lowering them. I've been asked on programs, financial programs frequently, well, what would you do? Would you raise interest rates or lower them? I said, I wouldn't do anything. I just don't get involved. But this is not doing anything. This is freezing the rates. and that's intervention. So markets don't work that way. And since we've destroyed the most important financial price that people should have for investment, and that is the interest rates of money. This mess is going to continue, and they will have to keep feeding it with, guess what? More inflation and more intervention.
Right, Dr. Paul. And we saw a number today, it's just astounding, that since September, 90% of all new government debt has been financed by the Fed. And I'd like to paint a picture for our viewers. What exactly does that mean? Well, let's imagine, you're a person, and let's pretend, hopefully it's not the case, but let's pretend that you're like the government and you're completely broke. So you decide, you go to your computer and you make up an IOU and you print it out. And you take this IOU and you see if you could trade it with somebody for cash. But nobody's going to give you any cash because, like the government, you're not going to pay it back. So you take your IOU and you take it to the Federal Reserve. And the Fed says, sure, I'll take your IOU. They print up the money, they hand it to you, and now you got your cash. And that's with the government. And that's why you can't rein in government when you have a printing press like this, that they're just going to buy the government debt. This week we saw Representative Thomas Massey. He said that Congress was given 19 hours to vote on a spending bill of $700 billion, 19 hours, and it was over 3,000 pages long. That's how you cannot rein in government. They're going to spend like crazy because there is absolutely nothing to stop them when the Fed can just give them the money.
I mentioned how important the price of money, the interest rates are, and we don't have a free market pricing of that, and that's why we get into so much trouble, and there's an endless printing of money. But another price or dollar relationship to a commodity called gold, that is important. It is a message. And just from personal experience, from conversations I've heard from Federal Reserve people, they're very interested in the price of gold. And that's also the reason why they do what they can to rig the price of gold. Just think, from 1933 up until 1971, they said, well, we don't want people to know what we're doing, and we do have a lot of gold, so we'll just rig the price and say the market has nothing to say about it. We're going to make gold $35 an ounce until we run out of gold. We didn't run out, but nearly did. So it quit working. But the price of gold is, the value of the currency tells people, gives people a lot of incentive. But I think that I'm very confident, that the gold price and the gold system in looking at history is very, very important. And they said, well, how do you know? Don't you think there'll be a substitute? Well, there could be, and we should allow it. But the whole thing is we have 6,000 years of history on our side to go back and say, this is what people to go back to. Many countries have failed. Many countries have been tempted to start counterfeiting their money and debasing their currency. But when it gets out of control, they go back to something that people can trust, and trust is very important. But I think the gold is speaking out loudly and clearly. It's not skyrocketing $100 a day, but if that happens, which it could, that's going to be a very dangerous time, because people will really have given up on the dollar if that happens. But we're seeing, I've looked at cycles even in my own lifetime of periods of time when gold would go down, be held down, and then all of a sudden break out and get into the marketplace. And that, of course, after the rigging of the price of gold at $35 an ounce, it finally broke down in 1971, and it was released to the marketplace. It went up to $800. So at $35, it was overtaken by the market. But then once again, after the ups and downs and all the mischief involved, at the beginning of this century, it was $270. Just think, just less than 2 decades ago, gold was only $270. But markets don't move as smoothly as one would think they should. But it took off at $270, went up to $1,900. And guess what? Then it went down. It went down, and right now I see it at another point which is significant, and that is the $1,000 in 2016. Excuse me. And I believe that is a significant number, and gold will, for a long time, continue to rise.
Right, Dr. Paul. I'll finish, Dr. Paul, by saying, you've mentioned many times, and you're 100% correct, that the monetary system will have to be rebuilt. This is just unsustainable. But what our viewers and influential people should always keep in mind when they're rebuilding it is always disregard intentions and focus on capabilities. Nobody should have the capability to counterfeit money. But you already know what they're going to say. They're going to say, no, we're going to have all these rules. When the moon is out, and if it's Wednesday and gas prices are low, we'll only print that. You'll see. Our intention is not to print money. Intentions are meaningless, and there are no rules when it comes to central banking. No one should have the capability to counterfeit money. And at that point, we can have sound money. And we already have a precedent, like you mentioned, for thousands of years. Gold has been money, the ultimate money, because it cannot be counterfeit. It just can't. And that's why governments hate it. That's why they don't want anybody to ever even think about gold. But when the people want it, they're going to have no choice.
Very good. You know, there's a lot of people right now worrying about the influence of socialism, and they've been able to play on some honest problems, because the one characteristic of a system that we have is the maldistribution of wealth. The wealthy do get wealthy, and the poor get poorer, and the middle class gets wiped out. But many people who are in charge now, and they're conservatives, and they want lower taxes and less spending, but they don't say a whole lot about monetary policy. Matter of fact, they say, boy, what we have to do is prevent those people who believe in modern monetary theory. And I think, you know, when I read the two, that's what we're doing. I mean, this is just a continuation of what they started a long time ago, especially since 1971, when the dollar was totally delinked from gold, and it was all up to the Fed to make all these decisions. So yes, we're in that program already. So if all of a sudden you know, the radical left progressives took over and they changed monetary policy, that won't be the problem. The problem has started a long time ago, 1913, the creation of the Fed. That was a big deal. It was a big deal when Roosevelt took the gold from the people, then debased the currency tremendously during the Depression. And then, of course, when Bretton Woods broke down, and we decided that we wouldn't even pretend that we could back the dollar up under international banking, that finally, it's all gone. So it isn't like if we get people who say, we believe in modern monetary theory, it'll all come down. No, it's going to come down anyway. And just printing all this money, and they're on the ropes right now. Because when they're talking about what they need, if they think they need to prepare to reassure the markets that they have to have $500 billion out there because there's a greater demand for financing repos at the end of the year, they're concerned. Now, you know, it might be a calamity. It might not even be as bad because they have printed a lot of money, and maybe markets will settle down for a bit, but it doesn't take care of the problem. And the bigger problem from all this is that the system finances big government, wars and welfare, and does all these distortions, and supports debt, and the debt is totally out of control, and our attack on our liberties is totally out of control too. So we have those problems. Money is very important. It's the way it's all financed. It encourages the deep state because they control it and they have benefits from it. But we have to realize that how important the money system is, because if nothing else, if we had have had all these people wanting to do these big things, fight wars and have the welfare state, but they said the one thing that we cannot touch is what the founders believe. We cannot touch the value of the dollar, and the dollar has to be related to a precious metal, and they cannot inflate like this. You know, we even with a philosophic endorsement of welfare and war, it wouldn't have happened. This only happens because of this sinister approach through the monetary system, the counterfeiting of money, and subsidizing the very, very wealthy. And that I think is the most important political event going on now, is because of the discrepancy in how and who gets the benefits. And right now, it seemed to be very, very unfair. I encourage people to try to protect themselves the best they can, and there are ways. But ultimately, the protection that we need is the protection of our liberty, and we're all involved in that. We all should be participating in protecting our liberty and reining in the government. I want to thank everybody for tuning in today to the Liberty Report. Please come back soon.